Welcome to this video over disability income related insurance. The first thing I would like to point out about disability income insurance is that it is only designed to replace lost income. It is not designed to pay any medical expenses if you get sick or injured. It is only designed to replace lost income. Now, to qualify for disability benefits, it's only going to replace a percentage of somebody's lost income. And once again, does not pay any medical expenses. Now, as an individual, you have a couple of choices on coverage. You could choose either an occupational policy, which would cover you on or off the job, or a non-occupational policy, which would cover you off the job only. However, your group disability that you might get through an employer, whether it be short-term or long-term, the way your group disability is always written is on a non-occupational basis only. It will only cover you off the job, because if you get hurt on the job, you have workers' compensation, and workers' compensation trumps everything else that happens at work. Next, as far as being disabled, there's a couple of different definitions for an insurance company to define disability. There is an own occupation definition, then there is an any occupation definition. The own occupation definition provides benefits if the insured is unable to perform any duties of their own occupation, which means if they can't do their own job, it would start paying a benefit, even if they were able to do something else. Then there is the any occupation definition. Now, any occupation means if you become disabled and you can't do your own job, that's not good enough. You must not be able to do any job because of your education, your training, or your experience. Like, they really want to make sure you are completely disabled if they are going to be paying a disability benefit. The way you need to know these two for your test is the own occupation definition is the more liberal of the two definitions, would provide the broader of the two coverages. Any occupation more strict of the two definitions. Next, there are some provisions in disability policies. First is called presumptive disability. It is a provision that would specify certain conditions that would automatically qualify the insured for their full disability benefits, such as loss of 2 limbs, permanent blindness, and permanent deafness. For any of those things, then they will presume that the insured is fully disabled and they can start getting their disability benefit right away. Another provision is called recurrent disability provision. Now, recurrent disability specifies that 2 like disabilities can be considered a continuation of a prior period disability. So what you would do is, if you had 2 similar disabilities, you had a disability, let's say you hurt your back, go back to work, a couple months later hurt your back again, well, that is a similar or a like disability. You would just pick up wherever you left off, whether that be during the elimination period or during the benefit period. Now, some disability policies have a requirement that the insured be under a doctor's care or possibly even confined to their house to receive disability benefits. Next, we need to define injury in a disability policy. There are 2 different definitions for injury. First, there is the accidental bodily injury definition, which means the damage to the body must be unexpected and unintended. Then there is the accidental means definition, which means the cause of the accident must be unexpected and unintended. Here is how you need to know it for your test. First, the accidental bodily injury definition is the more liberal of the 2 definitions, provides the broader of the 2 coverages. Accidental means definition, more strict of the 2 definitions. Next, on individual disability income insurance, it is required by law that disability benefits have to be paid at least monthly. There is a waiver of premium option in disability policies so that after 6 months of disability, premiums can be waived on the insured's policy, and they would also get reimbursed the premiums they paid during the 6-month waiting period. Speaking of some different periods in a disability policy, first, there is the elimination period. Your elimination period, all it is a deductible that will be measured in days, not dollars. Your elimination period begins from the onset of a disability, whether that be an injury or an illness. It's a period of time that must be satisfied before any benefits are going to get paid. Now, just like in a major medical policy where you choose your deductible and it affects your premium, the same concept here. The longer the elimination period, the lower your premium would be. Now, once you have satisfied your elimination period, then begins your benefit period. Your benefit period is a period of time when the insurance company is replacing your lost income. The longer your benefit period, the higher your premium would be. The longer the insurance company would have to replace your income if you're disabled, the higher your premium. Now, there is one other period in a disability policy called a probationary period. Your probationary period is put in there by the insurance company. It begins from the issue date of your policy. It is a period of time that must be satisfied before an illness will be covered. Another word for illness is loss, or certain losses will be covered. The whole reason an insurance company would put a probationary period in a disability policy before they would cover an illness is to help prevent adverse selection, or sick people trying to commit fraud. Next, we have a partial disability benefit. So after recovering from a total disability and you go back to work, but you're not able to work full-time yet, you can only work part-time. Well, your partial disability benefit is usually 50% of the total disability benefit you were getting while you were disabled. However, it will only get paid for a limited amount of time. Once again, they're not going to be paying you that forever. Next is a residual disability benefit. Now, this is really a type of disability policy, and it provides benefits for after you return to work after being disabled, but you still can't work full-time. You can only work part-time. And here's how you need to know the residual disability benefit for your test. The way they will figure that up is they will want to know, what were you earning before you were disabled? What are you earning now that you're back to work? And it helps make up for a loss of earnings. What were you earning before? What are you earning now? Helps make up for a loss of earnings. Next, we have some riders that can be added to a policy. First is a cost of living adjustment rider, or a COLA rider. It will help keep pace with inflation. It will increase the monthly benefit automatically when you start qualifying for disability benefits. A guaranteed insurability rider guarantees that the insured can add more coverage at a future date without proof of insurability. Now, if they add coverage at a future date, the cost of that coverage will be based on their attained age, how old they are that day. Next is a relation of earnings to insurance. What this means is that the insurance company isn't going to pay you more than the income that you had been receiving. Otherwise, there's no incentive for you to go back to work. So on the relation of earnings to insurance, you need to know for your test that they can look back over your last 2 years of earnings to determine the disability benefit that they would pay out. Next is a return of premium rider, which would provide for a return of a percentage of the premiums at certain times. For example, Maybe at the end of the 10th year, the insurer may offer to refund up to 80% of the premiums paid over claims. Most policies have a cash surrender value, which can create cash value of around 70% of the premiums over paid claims. It is only available at termination of the policy or contract. Now, group disability. So group disability, you get it through an employer. Group disability will always be written on a non-occupational basis only. It will only cover you off the job. In group disability, you could get short-term disability, which could have an elimination period as short as 0 days and a benefit period not longer than 2 years. In long-term disability, the elimination period will usually coincide with the benefit period of that short-term policy. Now, you do need to know the distinction here that lower wage employees are limited to 66 2/3 of their monthly income, where higher wage employees are limited to 50% of their monthly income. Now, let's look at some disability policies in a business setting. First is a key employee policy. Now, a key employee is someone who has specialized knowledge, skills, and business contacts, a very important part of a business operation. It would provide funds to a business owner to hire and train a replacement if the key employee became disabled. Now, the premiums are paid by the business owner, and they are not deductible as a business expense because if that key employee becomes disabled, any benefit will be received by the business owner, and that benefit is always tax-free. Next is a buy-sell agreement. Now, this would be set up by business partners. A buy-sell agreement states how a business would change hands if one of the business partners were to die or become disabled, and we're really talking about disability with our health insurance. Now, the same thing that we saw earlier with our key employee policy, premiums in this case will be paid by the business partners, and they are not deductible as a business expense because any benefit would be received by one of the business partners, and it will always be tax-free. Next, we have a business overhead expense policy. This is a type of disability policy purchased by a small business owner. However, if that small business owner were to become disabled, it would not replace his income. However, what it would do is cover the overhead expenses of his business, his rent, his salaries, his lease agreements, his utilities. It will keep the lights on and the doors open, but it does not replace his income. Now, in this case, premiums will be paid by the business owner, and those premiums will be deductible as a business expense for the business owner. However, if the business owner becomes disabled, any benefit received by the business will be taxable to the business. So on a business overhead expense policy, the premiums are deductible to the business owner. However, the benefits are taxable to the business. And then we have Social Security disability. Social Security was formerly called Old Age Survivors Disability Insurance. If you survive old age, we have some insurance for you. I guess that wasn't very kosher, so they changed it to Social Security or Social Insecurity, however you want to look at it. Now, with Social Security disability, some things you need to know. Number one, it is very hard to qualify for. Part of the definition says you must have a disability that is expected to last 12 months or end in your death. Like they really want to make sure you are going to be fully disabled if they're going to start paying a benefit. Now, if you meet those stringent requirements, then there will be a 5-month waiting period before your benefits even begin. This is the only 5 months on your test, the waiting period for Social Security disability. Then you also have to be fully insured. Fully insured means you must have earned 40 quarters of coverage, equivalent to 10 years of work. That is the FICA on your paycheck if you're a W-2 employee. Now, people younger than 65 might need Social Security disability, so it's also age-based. So anybody age 23 and under would have to have accumulated at least 6 credits. Anybody age 24 to 31, at least 12 credits. And workers' compensation. Workers' compensation, what you need to know is premiums for workers' comp are paid by the employer. Benefits for workers' comp are provided by the state. So workers' comp is done on a state-by-state basis. So it is not insurance companies that provide the benefits, it is the states that provide the benefits. Now, the different types of workers' comp benefits are medical, income, death, and rehabilitation. And that is going to do it for your disability income related insurance. We'll see you on the next video.